So for the better part of a century, the world has run on a system basically led by the United States. Some people call it Pax Americana, but right now a whole series of events, really unprecedented stuff, are putting that entire system to the test. And it's leading some pretty well-placed insiders to issue some very stark warnings about what could be coming next.
I mean, just listen to that. A real shock beyond what we can imagine. That's a direct warning about the sheer scale of the crisis we could be facing. It suggests that the shifts happening right now, both geopolitically and economically, are way bigger and happening way faster than almost anyone is ready for.
And that really is the central question here, isn't it? Are we watching the slow, controlled demolition of the world order we've known since World War II? Or is the whole thing about to shatter in a chaotic, totally unpredictable way? Let's break down the pressures that are pushing it right to the edge.
So, why is this geopolitical tension so incredibly dangerous right now? Well, it's because it's all happening at the absolute worst possible time for the global economy, which is already cracking under the surface from 5 really distinct pressures.
Okay, first up, there's this huge, kind of hidden part of the financial world called private credit. Just think of it as a $9.4 trillion shadow banking system. And right now, high interest rates are putting massive stress on it because investors are asking for their money back, and the system is really struggling to pay them.
Problem number 2. The job market is hitting a wall. I mean, for the last year, we've basically seen zero net job creation in the private sector. Companies are laying off thousands, and they're often pointing to AI as the reason, but they aren't hiring new people to replace them.
Third, and this is a big one, government debt is just spiraling out of control. The U.S. is spending way more money than it's bringing in, and that gap is getting wider and wider. Our national debt is now growing a lot faster than the economy itself, and you just can't sustain that forever.
And fourth, the bond market, which is kind of like the economy's early warning system, is flashing bright red. Rates on long-term government bonds are on the rise. That's the market's way of telling us it expects higher interest rates for a long time to come. And that means it's going to cost more for the government to borrow, for businesses to borrow, and for you to borrow.
And finally, the 5th problem, the trigger. A new conflict right in the Middle East, a place that's absolutely critical for global energy supplies. This could be the spark that sets this whole fragile economic structure on fire. So, with that stage set, let's take a look at who's actually playing this game. Now this might all look like random chaos, but it's not. It's a high-stakes global chess match, and it's all about energy and power. To really understand the game, you gotta first understand who's at the table and what each of them wants. Alright, so who's at the table in this game? Let's break it down. You've got the USA, trying to hold on to its top spot by keeping the petrodollar system alive. That's the deal that says oil has to be bought and sold in US dollars. Then there's China. Their goal? Knock the dollar off its throne and become the new global price setter for things like oil and metals. Russia? Well, after the US froze their dollar reserves, they are desperate to find friends and trading partners who operate outside that system. Iran is basically fighting for its own survival, using its control over key oil shipping lanes as leverage against the West. And then you have the Gulf nations, the GCC. They're trying to play both sides, keep things stable, but also hedge their bets in case a new system takes over. And finally, there's us. We're not at the table, but our 401ks, our jobs, our savings, they're all right in the middle of this global crossfire.
So what exactly is this game they're playing? Well, according to this analysis, a few key nations have figured out something pretty clever. They realized they don't need to fight the US dollar head-on. They just need to build a quiet alternative.
And here it is, the secret playbook. It's basically a 3-step dance to get around the US dollar. First, a country sells its US dollars and buys physical gold. Step 2, they turn around and sell that gold to China, but they get paid in Chinese yuan. And for the final step, they use that yuan to buy oil from sanctioned countries like Iran and Russia. It's a way to trade that completely bypasses the US financial system. And the crucial part, China gets to be the middleman, effectively setting the price of oil in gold. Okay, so is there any actual proof this is happening? Well, just take a look at this chart. It shows how much gold Switzerland, a major gold hub, has been exporting to Saudi Arabia. See that massive spike right there? It starts in 2022. That is the exact moment the US froze Russia's dollar reserves, which sent a shockwave around the world, telling everyone that holding dollars might not be so safe after all.
And look, this wasn't just a Saudi thing. The entire Gulf region shows the same pattern. It seems the GCC nations saw what happened to Russia's money and decided to start converting their dollars into a physical asset, gold, that nobody could freeze with the push of a button.
But here's where this new system hits a massive snag. It's a simple math problem, really. The global market for oil, every year, is worth over $4 trillion.
The market for all the new gold mined in a year, it's less than $500 billion. It's almost 9 times smaller. That means the gold market is just way, way too small to handle all the money flowing through the oil market without the price of gold going absolutely vertical.
Okay, so while this giant global chess match is playing out over there, what's happening back here at home? Well, our financial markets are feeling the heat, and some really weird things are starting to happen that we haven't seen before.
Now, this chart is fascinating. For a quarter of a century, jobs and stocks moved in lockstep. When more jobs were available, the stock market went up. It makes sense. But look what's happened recently. That link has completely shattered. Job openings are plunging, but the stock market is still soaring to new highs. It's like the market is betting that AI will make companies a ton of money, even if it means their own customers have fewer jobs and less money to spend. Sooner or later, these two lines have to come back together. The question is, how? The optimistic take is that AI sparks this massive productivity boom, creates a wave of new, better jobs, and that jobs line shoots back up to meet the stocks line. But the pessimistic view? It's that all the AI-driven layoffs will eventually crush consumer spending, and that will drag the stock market crashing back down to reality.
And all of this puts the Federal Reserve, our central bank, in a position where they are completely and utterly trapped. They are in checkmate. If they raise interest rates to fight inflation from a potential oil price spike, they could totally crush an already fragile bond market. But if they cut rates to try and save the economy and jobs, they could make that oil-driven inflation 1,000 times worse. There are no good moves left.
So, you've got this fragile economy, this intense geopolitical game, and a trapped Federal Reserve. Where does this all lead? How does this end? Well, the analysis suggests 3 possible outcomes, and they range from kinda bad to really, really bad.
All right, here are the 3 possible futures laid out in the analysis. Outcome number 1, the best-case scenario. The war in the Middle East ends quickly. Oil prices come down, the Fed gets the green light to cut rates, and the markets recover. But the world that comes out of it is different. It's more multipolar, and the dollar's power is permanently reduced. Outcome 2, the medium case. The war just drags on. Bond markets in other countries start cracking under the pressure, forcing them to sell U.S. bonds, which spikes our interest rates here and triggers a credit crisis, something like what we saw in 2008. And then there's outcome 3, the worst case. The war goes on for so long that the U.S. bond market itself breaks. To stop a total meltdown, the Fed has no choice but to print trillions of dollars, right as oil prices are spiking, risking a full-blown hyperinflationary debt crisis.
And all of this, every single piece of this puzzle, brings us to one final, really fundamental question that we all have to think about. As these systems that we've relied on for our entire lives are being pushed to their limits and currencies that are backed by nothing but debt come under serious pressure, we're all forced to ask ourselves, in a world full of paper promises, what actually holds real, tangible value?